Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Well, Diwali is over, and I belatedly wish members of the Hindu community and indeed the entire community Shubh Diwali as the new year starts for our Hindu brothers and sisters. Today, we wanted to look at the whole question of interest rates across the world, but in particular, what's going to happen in the US or US with regard to US dollar interest rates. Last week, we covered Trinidad and Tobago and we looked at the wider world. Today, what is likely? Well, we have an election, US elections, which will be decided sometime next week. But post that, sometime in December, it is expected with a 75% probability that interest rates in the US are going to rise. Why is this important to us? Well, it is important to us when interest rates move that the borrowers have to pay more in terms of interest. But investors, those who invest in bonds and equities, the likelihood is as interest rates go up, all other things being equal, valuations would fall slightly. That is, in terms of equities, some impact, negative impact, but more particularly in terms of bonds, what you would have is that the bond valuations would go down as interest rates go up. Let's look at what is happening out there in the world with regard to the interest rate story. And we'll turn first to Brazil. And when you look at Brazil, what has been happening, the economy has been driving downwards and in decline, expected in 2017 to go up. But market performance, when you look at 2014, the Brazilian equities down just slightly, but in 2015 down some 42%, as you would see on your screen. In 2016, even though the economy was down or expected to be down some 3.8%, in US dollar terms, this is what you are seeing, both in terms of equities up 85% and bonds up 71% for that particular year. And I look at this from the point of view of the BRICS versus the developed world. Brazil is the first acronym or the first letter in BRICS, and this is what is happening to Brazil. Interest rates in Brazil are expected to go down as the policy rate has moved from 14.25 to 14. What does this mean for you? Those of you who are investing out there in Latin America and so on, what you are seeing is as interest rates drive downwards, valuations are expected to go up, as seen what has happened very significantly in 2016, where Brazil was about the best performer amongst the large and major economies of the world. What's happening in India? Let's look at the next graph. And you would see that in India, indices have been somewhat checkered over the past several years, whereas Indian equities in 2012 were up 21%, better than the world comparative. What you would see again, down 27% up. And it's one of the better performing indices in the world today, where in 2016 year to date, you have 6.1% versus the world index of 4.4%. Again, in India, one of the major players of, in terms of Brazil, Russia, India, and China, interest rates are going down. So the expectation is that interest rates will go up in the US, but as interest rates go down in some of these areas, one could expect with economic growth and so on, valuations will start to pick up. Turn now, let's look at the next graph. And we look at what is happening in terms of this matter of economic growth across the world. Well, China has been trending downwards, but still for the second largest economy in the world, look at the growth. Though declining, it's still at an absolute level of 6.1% expected in 2018, 6.2 2018. The bright spot remains India, where the economy continues to stay at a high and it is the highest growth level amongst the economies of the world, where India is 7.7% expected to be in 2018 and 7.6. But the rest of the world, what's happening with the rest of the world? Well, somewhat anemic in the Eurozone. In the US, the largest economy in the world, trending upwards to 2.4%. And of course, we just spoke about Brazil, which was in negative territory and coming back up into positive territory. What's next? What we can see, though, is that the emerging markets have done better than the developed markets for equities over the past year. Recall last year at the end of 2015, what happened? Interest rates in the US went up by 0.25%. And the markets in the developed world, as you would see represented by red, down in the first quarter 2.2%, while emerging markets, that would be in the main Brazil, India, China, and so on, up on average 5.4%. Second quarter, again, developed market down further than the emerging markets, while the emerging markets were down. And then in the third quarter, the emerging markets beat the growth of the developed markets. Again, in the fourth quarter, year to date, what you have is developed markets down, emerging markets just slightly flat. What does it say to you? You have to look at where you invest across the world. And how can you invest across the world? Well, we have said this already. You will be, for example, in Brazil, you will probably be investing in our fund, the Bourse Brazil Latin Fund, through mutual funds here. In India, you'll be probably investing in the India Asia Fund. But there are other funds on the local scene where you can participate in these developments without necessarily having to go to a broker or anybody outside. Talk to your brokers and find out what's happening. Finally, what I wanted to show is how can you invest, for example, in the bond market in Brazil. I gave just one example, a Libra, which is a 2021 bond, 5.7%. Bharti out of India, US dollar denominated, of course. What you would see in that fund, you would see that those are investments that can take place there. So these are some of the thoughts that we have for you for how to invest, where to invest. Talk to us about how you can get into these investments or in Trinidad and Tobago and make better use of your US dollars, where in our economy and our system, deposit rates are 0.2% or less, and money markets are about 1% or thereabouts for US dollars. Look for us in the newspapers where we provide information with regard to our Bourse and Save Invest mutual funds. And you can call us at 628-9100 for more information, or go to bourseinvestment.com for any further information that you would require. Have yourself a wonderful investment week. This is Subhash Ram Kilawan for the Bourse Report.